Alright, if you're just starting out in trading, charts can feel super overwhelming. What do you even look for? Candlesticks, bars, or line charts? I remember when I started out, I was extremely confused. And let's not forget about time frames. There are so many different time frames. What should you even look for? Don't worry, I've got you. In this video, I'm breaking down everything step by step so you can chart with confidence. So let's get into it. Let's now have a look at what we as traders stare at the majority of the time, and that is price charts. So this will be an introduction to price charts. And then when we go over to TradingView, we can select many different price charts. So for this video, I want to focus on the most popular ones, which will be candlestick charts, which we're seeing here, line charts, as well as bar charts. So for candle or for price charts, it is important to understand why we actually look at this. And that is obviously because price charts visually represent market price movements over time. So on that note, it makes sense to discuss the different time frames. So on TradingView, we have the option to select different time frames for different market auctions we want to see. At the moment, it is selected to a 30-minute time frame. That means for every 30 minutes, we will get a new candle being printed. Now we can also set that to a different time. For example, if we decide to only look at the daily time frame, we will get one single candle printed every single day. For scalp traders, we can also go a little bit lower on the time frame and can even get a 1-minute candle being printed every single 1-minute auction. So this really comes down to your personal preference. If you're more of the low time frame trader or a higher time frame trader, you can select every time frame you like to use. So for me, I am always making my plans on the higher time frames, such as the daily, 4-hour and 30-minute time frame, and then drop down to the even lower time frames, such as the 5-minute and 1-minute, to make an informed decision. Let's start with the most simple price chart we can look at, and that is the line chart. So there's a very big difference between a line chart and a candlestick chart, and that is that we only have very limited data available if we look at line charts. So as opposed to looking at candlesticks where we get the open, high, low, and close of a candle, using a line chart, we will get every 30-minute auction, because we have selected the 30-minute time frame. We get the closing prices connected to one and another, and we will get a simple trend. What we lack in this line chart is the detailed information of the opening, high, and low in each and every 30-minute auction. So this time frame or this line chart can be useful if a trader is looking for the high time frame trend and looks for a simplicity in price charts and only wants to see the overall trend. For me as a scalp trader, I don't really like to look at line charts too much. Sometimes I refer back to it for the overall trend, but it is lacking detailed information, so I prefer to use the candlestick charts, which we can look at next. A candlestick chart represents much more detailed information compared to a line chart. So if we have a look at this on the daily time frame, so for every day we will get a new candlestick being printed. We can have a look at the characteristics of a candlestick. And here we can see 4 very important data points. We get the open. This will be down here if we choose to look at this daily candle. We will get the open of the candle, we will get the low of the candle, the high of the candle, as well as the close of the candle. So the typical color coding is that for a candle that moved up in price, we will get a green and thus bullish candle. Now that means that the closing price is higher than the opening price. So as a reminder of something you can note down, if price is closing below its opening price, we will have a bullish candle. And vice versa if we have a bearish and red candle. So for a red candle, we can see the opening of that candle, we can see the high of that candle, we can see the low of that candle, and the close of this candle. And it will be a bearish candle if the closing price is lower than the opening price. Candlesticks are especially popular for short-term traders who want to see as many detailed information as possible for a 35-minute or 1-minute auction. It is also very useful for the higher time frames, but especially for low time frame trends, we need to see as much information within a single candle as we can. For me as a scalp trader, this is the chart that I primarily use. So for all my analysis I am doing, I refer to candlestick charts. So it doesn't matter if it's the higher time frame or lower time frame, I prefer to look at this detailed information of price charts. Now next we can have a look at bar charts. So this will be this right here. And this already looks very different. So let's zoom in on a daily time frame. That's probably best. And we can have a look at this particular example and I will explain what bar charts do. So for bar charts, we also get the open, high, low and close price, but in a more compact format than candlesticks. So what we will see here, if we look at this particular candle, we will see the open, which is this horizontal line to the left. Then we will get the low of this bar, we will get the high of this bar, and the close of this bar, which will be the horizontal line to the right. From the low of this candle to the high of this candle, this is visually shown by this vertical line. And same as with candlesticks, if we get a close that is above the opening price, it will lead to a bullish candle, and vice versa. If we get a closing price that is lower than the opening price, we will get a bearish candle. Bar charts are preferred by some traders as it's a clear representation of price ranges within each period. And that is offering balance between simplicity and detail. For bar charts, we have less visually intuitive than candlesticks, but it provides the same essential information. For me, however, I like to look at candlestick charts because for me that is much more obvious. For you as a trader, it's extremely important to choose the right price chart that fits your trading style. And the line charts can be best for long-term trend analysis and simplicity, as I already discussed. For candlestick charts, it is ideal for short-term trading and pattern recognition. For example, we can look at doji candles or engulfing patterns. Bar charts, it's useful for traders who prefer a clear, concise view of price ranges and movements. But this comes down to a personal preference, so the choice of chart type often depends on the trader's style, goals, and the level of detail they want to have. Combining chart types is also something we as traders can do. As I said, when I sometimes want to have a simple high time frame trend, I can always refer back to the line chart. So just because you are using the candlestick chart most of the time doesn't mean that you can't at times refer back to a different price chart. And in conclusion, price charts are an essential tool for traders, each offering unique advantages depending on the level of detail and analysis required. So I hope you could learn something in this lesson, and I hope you can make a decision on which price chart suits you and your trading style best.